Well, thank you. My name is Josh Kincaid. I'm a capital markets analyst. I'm a co-founder with ToroAlerts. And just a little bit about myself. I got completely out of the stock market in 2008, completely lost confidence, and didn't get back into the market until I found the technology behind ToroAlerts. So basically, ToroAlerts, we license an automated stock trading software to traders ranging from sophisticated investors to institutional advisors, but we built more than a customizable robo-advisor. So it's a financial and risk management tool to help guide you through volatility while providing capital preservation and peace of mind. So we do that with the removing of emotions. That's kind of the problem statement. Too many emotions in the industry. We do that with AI and ML with predictive analytics. So let's jump in. So you guys may know about Nick Murray. He believes in not trying to time the market. Now, there's other people who believe that timing the market is everything. During the last bull market, the longest bull market in history, you could essentially throw a dart and win. So people like Mark Cuban believe that if you're smart enough, you can time the market. So there's two types of investors, kind of just giving us a baseline real quick. The first is investment advisors or just investors. And the second are traders or those that are self-managing their assets. The first being the investment advisors, they believe that never trying to time the market. Traders, on the other hand, believe that timing the market is essential. The only difference is that investors believe timing the market is exhausting, while 99% of the traders can't actually time the market. On the other hand, traders want to get in and out as quickly as possible because of situations like we saw yesterday. I don't know if you guys saw that. There's also earlier in the year, what we saw at the beginning of COVID or 2008, 2001, keep going. The whole idea of decimating your portfolio, including retirement accounts. So there's a scenario where the market's overpriced as well and not worth the risk. So where's the middle ground? So if your objective is risk management, capital preservation, then we believe that the middle ground is automated investing. I believe automated investing is really for any type of scenario, but where we are right now is high volatility and capital preservation. So we're going to focus on that. But do you guys remember the Twitter account that was tracking Nancy Pelosi's stock trades? And they got dropped. But that mirror or copy trading on her husband's account is interesting. So what we started to do recently is to use ToroAlerts as a source of verifying investment strategies through our platform called Social Intelligence Platform, which is an aspect of social intelligence and artificial intelligence. And essentially, it's that social intelligence integrated with machine learning coupled with automated trading that kind of gives us that secret sauce. So basically a watchdog for your portfolio using artificial intelligence and social intelligence with predictive analytics. We review over 1,000 different technical indicators, as well as some fundamental and breaking news. So if there's any IPOs or any mergers that happens that hit the newswire, we're able to take advantage of that. So there's different types of people, different kinds of traders or investors, some who like the thrill of trading. So for them, there's an alert system where they can get alerted to trades, giving those investors the choice to either execute those or not. Some people like to build strategies, so they want their strategies to be ran automatically. And then there's other people who just want to be influencers. Maybe they want to design a strategy for other people to use and lease those strategies. Regardless of which type you are, you're going to want to find a system that caters to all various types because you're probably going to change what you want to do over time. So your needs and wants are going to change. Find a platform that's going to change with you. More and more people are on the go. So you want to have access to a mobile app where you can build a portfolio, create strategies, and get those buy and sell signals. You may want to pick and choose a strategy that other people have developed and get alerts from. Maybe you want to search mutual funds, or maybe you want a crypto app that tracks 250 cryptocurrencies. Investors may also find it useful to backtest strategies or subscribe to other investor strategies. And at ToroAlerts, that's called the arena. There's no-code automated tools that are becoming increasingly available. And so you can simply link your brokerage account to trade stocks or cryptocurrencies automatically. So that social aspect of trading can be seen in the popularity of YouTube and some TikTok financial influencers. But what about the automation? So you want to be able to find a platform that has all of that. So the flexibility is key when you're on the go. You want to find a platform that's mobile, desktop, and then automation is essential. So let's look at some portfolios. Typically, most people have in their portfolios is distributed through stocks or bonds. Some have real estate, but that 60-40 ratio seems to be the most talked about. So let's dive into that. Over the last 93 years, if you had 100% invested in stocks, your annualized return would be around 10%. If you'd have invested strictly in bonds, that annualized return is nearly 5%. That 60-40 ratio isn't going to help you very much because that average annual return is only 8.6%. Those ratios would have worked during that market downturn in 2009 because when stocks weren't doing well, bonds were taking off. You can see that in TLT with those long-term, midterm bonds that were doing really well. But during that time, a lot of companies were filing bankruptcy. So it kind of makes sense that a lot of money was wiped out of the stock market. But currently, we look at the situation right now, it might be a little bit different. Current situation with stocks going down, bonds are going down as well because the Fed's trying to raise rates to curb or reduce inflation. We're seeing the stock market lagging because of the Ukraine conflict, inflation with overprinting of the dollar, and various other reasons for the ensuing economic downturn. What are you going to do? Year to date, S&P lost 15% along with midterm, long-term bonds and losing money as well. That doesn't include yesterday, by the way. 7.6 trillion has been lost in the market, a lot more the last financial crisis. So with yesterday's market drop, that was historic. The intraday swing in the S&P 500 futures was one of the top 5 on record. So the situation we're right now is you can't really go anywhere. You can't hide from stocks. You can't hide behind bonds. You can't even hide behind crypto like a lot of people thought. So that's why cash is king when risk outweighs the rewards. And AI, we feel, is the best way to preserve capital during those volatile downturns and deciding when to get in and out of the market. But we're not naive. We understand that it's difficult. We understand that getting in and out of the market is challenging to the average person. And you can be in cash during a bear market, but only if you know that there's going to be a correction. That's why getting in and out is extremely challenging. Switching between cash and investing successfully, in our opinion, is only possible if there's a bona fide intelligence. There are automated ways of doing this because in the end, it's all about removing emotions. It's one of the problem statements, timing the market and emotions. So we believe that automated investing is the best choice during volatility because you don't know what the next financial crisis is going to look like. So in our analysis of the top 25 traded company stocks, 19 out of 25 performed fairly well based on our trading strategy. If you would have had a buy and hold strategy, you would have returned about 0.38% from January through May. But if you had an AI system, you could have mitigated those risks and automatically get in and out efficiently and had about 34% in that same amount of time. This hasn't been updated since May, but last quarter, our equities were up 8%. Our crypto was up 10%. Main objective for a lot of investors is capital preservation, especially right now. So you want to look for a company whose product allows you to go beyond. It has a platform where you can build and list in your portfolio of stocks, or for someone who wants to take smaller losses and have bigger gains, you can look for a platform that offers the best way to preserve capital during times of volatility. Oops. You want to find something that's trustworthy. So make sure that they're reputable. Also, to recap, the automated investing can strive for higher returns and capital preservation by removing emotions and using automated technology to get results. So for comparison, our returns last year for cannabis portfolio, quite volatile, 147%. Crypto was crazy, 876%. We're building out some options and futures portfolios, which are going to be released next year, and we're doing about 100% per month. But we started with the S&P 500, and our average 5-year return is 47%. So we've got some history on that. And like I mentioned, equities last month were up 8, and crypto was up 10. So that's it, real quick. Thanks for letting me spread the word on how to bring Wall Street technology to Main Street. Are there any questions? That's Rohit, by the way. He does exist. He is real. Yes. I have been too busy, but I don't know. I'm assuming it did pretty well though, because I mean, not to brag, but we're pretty good at getting out. Getting in, on the other hand, there's a lot of premature noise. So we'll kind of get in, and then the algorithm will say, "Let's get out." So it's pretty good at getting out though. fairly confident we got out of time. Any other questions? Yes.
What were the previous indicators that would mitigate the
That's a great question. I mean, we use 1,000 different technical indicators. So one of those could be 50-day moving average, volume, could be a number of things. I'd have to take a look internally and see exactly what triggered. You can follow up with me. I'll let you know percentage-wise too where we're at. Any other questions? All right. Appreciate your time. I'll be down in the booth if you guys want to talk to me later. Thank you.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.